Good morning, good afternoon. Welcome. Welcome. On behalf of Nate Self from GILICO, this is Tim Watts today. I just want to say thank you for joining our webinar today. Got lots of great information from Nate over there at GILICO. But before we get going on his presentation, did want to introduce everybody to us here at IAMS and tell you a little bit about some of the services that we offer here at IAMS. Best-in-class customer service is our commitment, and you can always reach a live person during our business hours at 800-255-5055. We strive to answer your phone call with an IAMS employee in 2 rings or less. We will have a few polls during this webinar, and you also have the ability to ask questions here. So if you do have any questions, definitely ask those as we go through the webinar, and Nate and I will answer those when we get to the end. And then, like I said, we'll have some polls. I'll announce those as we go through here, so we can take a peek at all of those as we get going. One of the first things that we have is our new producer builders. Our new producer builders are for those of you who are new to us at IAMS. These bonuses are available based on your production level within your first 180 days of contracting with us. We have great levels that you can qualify at, and as you can see, inside each level are some great options for you. We've got incredible business building tools, personal perks, and even cash rewards. If you would like to know where you stand towards your new producer builder, or if you would like to have a conversation about how to achieve that next level, please give us a call over here at IAMS. Moving over to our Business Builders program, we're going to see our Referred Producer program. We do have a couple advisors with us today that have taken advantage of this great program. Our business on the wholesale side of the industry is similar to yours in the field, in that one of the best leads we could ever obtain is a referral from one of our valued producers. This is why we want to make it worth your while to refer a producer to us. With that being said, when you do send one our way, we will cut you a $50 thank you check just for getting them set up with us. Now, where the real money comes in is as your referral writes new business, you will receive an override on that business. Our ownership team, Steve, Charles, and Curtis Hawk, signs checks for thousands of dollars every quarter. If you can think of anybody that would be a good referral, or at least one that I should reach out to and see if it'd be a good fit, definitely type their contact information in that questions box, or you can send me an email at timw@imsinc.com, and I will reach out to them. Below that is our marketing reimbursement program, which is also a very popular program that we offer. For every $100,000 in fixed indexed annuity premium that you sell with us, you get reimbursed $100 into your marketing reimbursement account. Now, what's great about this reimbursement account is it's truly your money. We don't cap your account, tell you where to spend the funds or when you have to spend the funds. It's truly your money to utilize to help build your business. We also have a creative team that you can utilize these marketing reimbursement dollars on. If you'd like to spruce up your website, maybe get a banner or some sort of other advertisement done, or any one of the other very vast other options of what that creative team can do. If you do have any questions on what your balance is or how you can utilize that funds, definitely give us a call over here at IAMS. Back office support. This is another way that we add value to your business. This is a core of IAMS and how Charles Hearing founded us 36 years ago. We want to help the independent advisor work smarter, not harder. We are going to do that with great business building tools and resources. Of course, advanced case design assistance, life and annuity quotes is part of the service that we offer, and we guarantee that we're going to get you that quote back in 24 hours or less. We'll be honest with you, and many of you on the call already know that we're typically much quicker than that 24-hour timeline, but if you did have a very complex one, it might take that amount of time. Otherwise, it's typically going to be within a couple hours. Submission of that application to commission support is handled by our new business teams. Amber Williams heads up the annuity side, and Cindy Fry is on the life side. They have fantastic teams who work tirelessly to help you get commissioned quicker. We'll scrub your applications, submit them on your behalf, and do all the administrative tracking, get you updates on the cases as needed. We do this to ensure that you get commissioned as quickly as possible, and this is a service that we provide to our valued producers and how we help grow your business by keeping you in front of the clients where our team handles the back office support for you. Next, we do have Firelight eApps. This is a single sign-on that is at imsinc.com. Technology is where the industry is going, and Firelight is a top-notch site streamlining the application process. Most of our carriers are on the eApp platform, so you can go onto one site to submit business. It is COVID-friendly, and some carriers are going to eApp only for some of their product lines. Well, also, some carriers also are offering extra commissions for utilizing the eApp platform. Make sure you ask your sales director before you submit a paper app if you could earn more funds by submitting that via eApp. Utilizing our Firelight platform accelerates the application process substantially. The eApp platform helps you submit business in good order the first time. This also reduces the processing time of your business and gets you paid quicker. As I mentioned previously, this is a single sign-on at IAMS Inc. that we've integrated with our businesses with Firelight, so you can have the most effective and efficient way to submit that business. We do have a full in-house creative team. I briefly talked about that earlier with our marketing reimbursement funds that can help you and your practice with lots of items that are turnkey and available for you. We can simply impose your contact information and your business logo onto it. Speaking of logos, agency solutions are something that we are very good at. And if you haven't created a full customized brand for you, we can assist with that. This is going to help you with name recognition, which grows your natural market organically. We can get your logo designed and imposed on business cards, brochures, and stationery. Lastly, what everyone is currently looking for is digital marketing solutions, and we can help you with websites, social media, social media marketing, and email marketing, most everything here to help get you going there. The internet and social media sites are where the overwhelming majority of prospects go for information. Making sure that you're accessible and represented in those marketing lanes is beneficial to growing your business. Contact myself or one of our other sales directors once this webinar concludes to see how we can have our IAMS creative team help and assist your practice. We do have our website, and this is a great tool for our producers to use, and another reason why working with us at IAMS is very beneficial to your practice. Once you're contracted with us, you'll have full access to everything that you see on this slide and so much more at imsinc.com. If you haven't registered for the website, it's very simple to do. When we're done with this call, go ahead and create an account, and we'd love to see you get on there. A lot of great tools are available to you, including illustration tools, online forms, product grids, product news, and industry updates as well. IAMS Wealth Management is approaching 5 years old now. What we've done is grow this division of IAMS very organically. We've helped advisors become IARs and pass the Series 65 at a very successful clip. Once we have you registered, we will bring great value to your practice with an incredibly competitive fee structure for both you and your clientele. We have great technology as a great investment for the platform. This has been a major growth sector for our business, and assets under management could be a major growth sector for you and your business as well. We hosted 4 life and annuity academies in 2022, and we have a full agenda planned here for 2023. I think we're shooting for 4 to 5 of those. So in these academies, I'm going to have post a poll question here as I talk about the academy. So at these academies, you would partner with other top producers within the field. This isn't a an introductory to annuities and life insurance. This is a academy designed to add fuel to the already burning fire that you have and help double, triple, or quadruple your revenue going into that next year. We bring in top keynote speakers at these academies, also go over many of our very successful marketing strategies, as well as bringing in all of these top producers from around the nation. You get to network with them as well. Awesome experiences, and this is all expenses paid. So we're going to pay for your travel, food, hotel, and the academy as well. Thank you for those who voted on that poll. Appreciate that. If you're not able to come out to one of our academies, we do have a virtual event this January 18th. This is a great way for you to get some of the benefits of a life insurance and annuity academy, well, the benefit, well, in the comfort of your own home. If you'd like to get registered or learn more about this event, go to imsascend.com. That's IAMSASCEND.com. We do have 3 keynote speakers, including Invesco Senior Director Chris Meacham, best-selling author and strategist Dr. Mary Beth Kuzmeski, as well as Nobel Prize winner Robert Merton, to line out the keynote speakers there for that Ascend event. Next, we have our next producer trip. We just got back in October from Washington, D.C. and the Greenbrier, where we had around 60 agents out there for a full week of fun, relaxation, and networking with those other top producing agents. Our next trip is going to be the Seaside Sanctuary, and qualification has already begun for that. We really enjoy working with these top advisors, and they enjoy these types of rewards as well. We put a lot of great stuff out on Facebook and LinkedIn. Definitely make sure that you register there and are not missing out on any information from that we're always posting out there. Got our second poll question here, and that is, are you currently happy with your current IMO? We know that there's lots of different IMOs out there. We do our best to strive in customer service. That's why we answer that phone call within 2 rings or less with a live person. No voicemails. If you've got an urgent need, we're going to get you in contact with somebody who can take care of that. Also, we want to be collaborative sales partners with you over here at IMS. We want to meet you where you're at and then help you get your business to where where you want it to go. And then lastly, utilizing those marketing strategies to help keep you rainmakers in front of those clients, making it rain. We know that you've got a lot on your plate, as most of the time you're at the top of that practice with all of those different obligations that you have. And so having a supportive IMO is a very key part of that. I'm going to go ahead and close that poll now. Thank you, everybody, for joining there. Now I'm going to be turning it over to Nate over at GILICO. So just one quick second. Let me change over there to Nate so he's presenting. There you go, Nate. I think it should be over on you now, bud.
Perfect. Thank you, Tim. I appreciate that. One moment here. I'll get it all set up. All righty. Well, good morning, everyone. And thank you, Tim, for all that very helpful information. Lots on the calendar this year for business growth, and we're really excited to be continuing to partner with IMS in 2023. It was an incredible year last year, and we're looking forward to an even better year this year. Like Tim mentioned, my name is Nate Self. I'm with Guarantee Income Life, also known as GILICO, and I'm truly delighted you're with us this morning. Today we'll be covering a topic that is really top of mind for many of you with the market volatility that we're experiencing right now. 2022 was one of the worst years in history, both for the equity and bond market, with both sectors dropping more than 20%, only for the 3rd time in history. And we'll be discussing biases that you may be hearing from your clients with how they're investing their hard-earned dollars, and how their biases affect their outcomes in retirement. The overall goal from our time today is to make sure you have talking points and strategies to address client biases in a cordial way. And then we'll wrap up with an overview of how we here at GILICO are offering solutions to help your clients during these troubling times. Shall you have any questions or feedback, please feel free to email or call after the presentation, and I'll be glad to visit with you individually. So now let's just jump right into it here. So I'd like to kick off the presentation with a quote from the youngest person ever to be crowned heavyweight champion. Mike Tyson once said, "Everyone has a plan until they get punched in the face." I want you all to keep this quote in mind as we talk about common pitfalls and mistakes that clients make when planning for retirement, that everyone has a plan until they get punched in the face. Now, for clients, it might be easy for them to put together a plan and stick to it when things are going well, but how will they react during times of adversity that we saw, such as in 2022, and how will that affect their overall retirement? So what is behavioral finance? In the most simplest form, it's the study of effects of psychology of investors with a focus on why people tend to make decisions based on personal biases instead of facts. So for our key goals today, we're going to be talking about various biases and aversions that clients have that can cause them to make irrational decisions with their hard-earned dollars. Then we'll discuss timing on how sequence of returns can impact a client's portfolio and income during retirement. And then we'll wrap up by sharing some ideas on how utilizing a fixed index annuity can help optimize the outcome for your clients and reduce the impact of built-in biases. Now, you'll likely work with clients with a range of investment styles, and there's 4 different types of clients. The first type of client is a buy and hold investor. These are consistent in their strategy and their decision-making process. However, they're greatly impacted by sequence of returns late in retirement. The second type of client you'll probably work with is a rebalancer, and these are critical thinkers who adjust their portfolios on a systematic basis, and they can be also impacted by how often they rebalance and are affected by sequence of returns. The third type of client is a valuator, and valuators are often opinionated risk takers that are impacted by their own personal biases. And the last type of client is shifters. Shifters make sudden, frequent changes to their portfolios, typically based on current events or what investment news they read, and are drastically impacted on, the current events that are taking place that they're taking. Any of these types of clients on the screen here could benefit from this presentation and knowing that the key biases and how they'll affect them throughout their retirement. Now, this may be a surprise to some of you, but Hallmark is the #1 fastest growing channel on TV right now. And there's a reason for that. And the main reason is because they have a predictable recipe when you turn on the channel. We all know when you turn on Hallmark, you're going to meet some characters at the beginning of the show or episode. The characters are going to encounter some sort of conflict. The characters then are going to overcome some sort of conflict. And then at the end of the episode, they'll be in a better place where they were when you first met them. Now, in an uncertain world that we're in right now, the Hallmark channel is providing certainty to all of their viewers, which is drastically increasing the amount of viewership going to the Hallmark channel. Now, this could be paired to our industry as well. Your clients want predictability. They haven't heard a consistent story like the Hallmark channel about their retirement. Here at GILICO, we recommend by starting to share why investment decisions they make now will impact how predictable their outcomes will be by removing market volatility with a guaranteed income stream to achieve what they've always wanted. But first, I think before you get into this narrative, share the plot twist of challenges they'll face throughout retirement to set up the story, just like the Hallmark Channel does. So let's take a closer look at some of these common biases and aversions that can affect client decision making. So the first type of bias is anchoring bias, and this is used every day. In fact, it just happened to me this last weekend. It's a bias that causes us to rely too heavily on the first piece of information that's received to make our decision. We see retailers use this all the time in their marketing strategies. So let's say you go to store A looking for a pair of shoes for an upcoming party. Store A offers no discounts, and the pair of shoes fits all your needs and is priced at $199. You decide to look at another store, store B, and they have a similarly priced pair of shoes, but the original price was $500, and those are marked down to $199. You're saving over $300, and you're likely going to pick store B because they're on sale. Now, this retailer, store B, just appealed to your anchoring bias. When you saw the original price of the shoes at $500, you set an anchor in your mind that those shoes are worth $500, and there's no evidence that the shoes are any varying quality other than the original at store A. And since we have all this bias, it's our human nature for us to want to buy those discounted shoes at store B. Now, let's think about this from an investment perspective. Let's say you have a client that's watching the price of specific company stock. 6 months ago, the stock was valued at $100 per share, and your client is using this as their anchor. Today, the stock is valued at $50 per share, and the client is thinking that buying the stock at a discount and invest $10,000. However, is that truly a good buy, even though it's on discount? Certainly, based off its previous high of $100 per share, this could be a very good buy. There are many reasons the stock's value could have declined. Is the client truly looking at all these things, or are they falling prey to this anchoring bias? Another example that might hit closer to home for all you regarding anchoring bias is when talking about client performance and returns on their statements. Let's say you have a conservative client and their first year return is 15%. We all know 15% for a conservative client in a bond portfolio or an indexed annuity for that matter is a phenomenal return. However, your client is now anchoring their future results to their first impression of 15%. Thus, you spend the next several years reminding your client that 15% is not an appropriate anchor. I think talking to your clients about anchoring bias, how it affects their decisions in the future, and make sure you're setting clear expectations on results in your upcoming client meeting. If you have a conservative client, try talking to them about your annual returns of 4 to 7%, set the anchor to prior to their first statement, and set a plan in place and stick to it. That plan should really only change when the needs or objectives of your clients have changed. Now, confirmation bias is our tendency that confirms all of our beliefs, but see evidence that contradicts them. This can lead to an investor being way overconfident and can be extremely dangerous. So let's say you have a client who's bearish on the market right now. They'll tend to absorb information that reinforces their beliefs and ignore information that's contrary to what they currently believe. Because they're bearish on the market, they'll hang on to a little tighter their money, or they may make a reallocation in their portfolio. Now, on the flip side, let's say you have a client who's bullish on the market. They'll absorb information that reinforces their beliefs and ignore contrary to. And they might start pouring money into the market and spending at a higher rate. Here at GILICO, we're not here to tell you whether you should be bearish or bullish right now. But the fact is, everyone, including clients, have their own opinions, and they'll seek to find evidence that supports what they believe in. On the screen here, you have a few articles in 2009, just shortly before the greatest bull market in history. And if you were bearish on the market, there was plenty of articles to support your beliefs. and you could have missed out on this major bull run over the last 12 years. So to avoid confirmation bias, it's key to increase communication between yourself and your client, stick to the plan, and try to look at various investment decisions objectively to try to remove the bias. The next type of bias is recency bias, and this is assuming something will happen again and again as it happened before, or putting a greater emphasis on what's already happened. So in 2010, a millennial entered the workforce, and in 2000, they may have been reluctant to save for retirement. Now, why would that be? That's because they started saving for retirement in 2000 only to see a tech bubble burst and an 8-month recession that spanned from March 2001 to November 2001. Then a short time after that, they recovered. And then unfortunately, the Great Recession started from December of 2007 and lasted for 18 months. Needless to say, after the 2 significant recessions, younger Americans were skeptical of the market, and many were late to capitalize fully on the bull market of the 2010s. Their recency bias caused them to think another bear market would be right around the corner. We all have this tendency to think what is happening now will continue to last forever, or what will happen in our recent memory will happen again. This is why people usually invest at the wrong times, and people tend to invest after a strong year in the market and tend to not invest after a down year. Now, to address this with your clients here, that nobody consistency has all the right investment decisions, including experts, and the best strategy is to have a plan, stick to it, and reevaluate longer-term allocation decisions systematically. The next type of bias is herding bias, and I want to do a quick game here. If I were to ask you on the screen of line A, B, or C, which one is equal to line X? What would the answer be? And most of you would be correct and say it is line B. Now, Solomon Ash, scientists, did a study with people individually and found that people by themselves would select B and get the questions right 99% of the time. Now, he did the same experiment with 50 male students from a university. He conducted the test with 1 male student at a time and put them in a room with 7 planted participants. And the planted participants agreed in advance that they would choose option C. Each planted participant had to give their response out loud first, with the real participant going last. Now, 32% of the time, the planted participant would conform to the rest of the group and give the incorrect answer. They would just herd to what the others said and not believe in their own thoughts. Now, to address this type of bias, of herding bias, be sensible about your client's goals and try to remove emotions that they may be hearing from their peers. The next type of aversion or bias is uncertainty aversion. Really centers around how people choose a known probability. People want a certain outcome. So let's play another game here. We have 2 boxes on the screen. Both are filled with 100 red and 100 black balls. Box A is filled with 50 red and 50 black, and box B is filled with a total of 100 balls. But you don't know how many red or how many black there are in box B on the right there. If you reach into one of the boxes without looking into it, I'll give you $100 if you draw a red ball. Which box would you pull that from? I'm guessing a majority of you will choose the known probability, box A on the left, with 50 red and 50 black. Now let's play it again, but this time I want you to draw out a black ball. The majority of people, again, I'm guessing, will still choose the known probability of box A on the left, 50% with 50 red and 50 black. But this theory of choosing the same one, if you chose to choose red on the left and choose black on the left again, is illogical if you favored one or the other. Then you would rationally choose box B. The bottom line here is the fear of uncertainty clouds our judgment, and people tend to favor known probabilities for a more predictable outcome. This is why you'll run across a client who's held a 6-month CD for 10 years. That client has a known outcome. They're given a stated return, and every 6 months they have the opportunity to move their money. Now, to address this bias with their client, make sure the client is investing with future goals in mind so that they're not taking the easy way out in the more. So the last aversion type we'll be discussing today is loss aversion. And this is an important concept to speak to your clients about. It's the idea that clients hate losses twice as much as they like gains. We've all heard this concept before, but this was a study actually done by Kahneman and Tversky, and they did something similar to what I have on the screen. I'm going to give you 2 options here, and you get to place a bet. You have a chance, 100% chance of winning $3,000 or an 80% chance of winning $4,000. Now, which one would you pick? Most people would choose option, in the study, nearly 80% of participants chose to take the guarantee at $3,000. 20% went with the 80% chance. The majority of people wanted the guaranteed win. Again, not surprising that people want to confirm their decisions. Now, ask the same question regarding losses, the outcome was different. And this is what people don't know. When asked which one would choose 100% chance of losing 3,000 or an 80% chance of losing 4,000, the participants were willing to gamble, with 92% choosing to gamble on the opportunity and chose the 80% chance to lose $4,000. This story illustrates the length that individuals will go to avoid losses. And we see this with investing all the time. A man by the name of Terrence Odian conducted a study of trading record between 1987 and 1993, and he found that investors were quicker to sell stocks that were high or winners, but then tend to hold on to stocks that were down or losers to try to recoup some of their losses. On average, the winners were sold at an average of 3.5% higher market returns than the losers that were held. So how do you address this myopic loss aversion with your clients? And this is, again, the theory that you hate losses twice as much as you like gains. And you want to have continued to reinforce long-term goals, clear communication, and just share this study with them and why this happens to clients. So to wrap up the summary of behavioral finance and how to address this in your practice, recognize biases in yourself. I think this is important to do the practice yourself so that you can share and have a very open conversation with your client. Define objectives, put a plan in place, stick to that plan, and communicate with your clients and reinforce the plan and objectives over a period of time. So now that we've covered the biases, let's switch gears here and talk about how timing can impact a client's retirement savings and outcome. So when understanding client behavior, I like to start by identifying 3 pillars of retirement plan construction. First being product selection. This includes various investment vehicles your clients are using for their retirement dollars, such as mutual funds, ETFs, annuities, or life insurance. Pillar 2 is client allocation. This means how much the client's going to allocate to each product. And then pillar 3, most importantly, is timing. I know this is the most important because of our next slide here. So from 1990 to 2019, the S&P 500 index returned an average of 9.96%. However, the average equity investor only returned 5.04%. Now, why did this happen over this period of 29 years? And it's very close to the myopic loss aversion that clients tend to buy and sell at the wrong times. Now, with the second important aspect of timing, behavior has nothing to do with the outcome of a client's return. It has everything to do with the sequence of those returns. So let's take a look at a few clients here. All three clients have retirement age of 65 and $500,000 invested for retirement. Adam on the left there retires in 1995, and he puts $500,000 into a passive S&P 500 ETF. Adam then begins to withdraw 5% per year, and after 16 years, Adam's $500,000 investment has grown to $834,355, all while he has taken $25,000 or 5% in withdrawals every single year. Now, on the flip side, his friend Bill retires just 5 years after, in 2000, and he goes into the same passive S&P 500 ETF. Bill also takes $25,000 per year in withdrawals, and after 16 years, Bill's $500,000 investment has depleted to only $27,699. This example has everything to do with sequence of returns. Adam was the beneficiary of great timing. During his first 3 years, the retirement S&P increased 111%. When Bill retired in 2000, the S&P 500 decreased 40% over his first 3 years, crippling his entire retirement portfolio. These are two real-world examples of how sequence of returns can impact the client's retirement. Now let's take a look at Chad here in our third example. And the reason Chad is important is this story is placed in a $500,000 index annuity here with GILICO in our Wealth Choice 10 FIA product. 5.93% withdrawal rate, or $29,650 per year of guaranteed income for the rest of his life. Throughout the presentation, we highlighted the different biases and aversions that cause people to buy and sell at the wrong times. And remember, timing can significantly affect the client's income in retirement, and an index annuity can completely remove sequence of return risk that your clients face. So what are all the benefits of an FIA and how they can help your client? A fixed index annuity might not be right for every client, but it can check a lot of boxes to help avoid biases and aversions in their portfolio. FIAs can be used to provide predictable retirement income and reduce or eliminate sequence of return risk that we discussed here on the last slide. In addition, if you have clients who are invested in bonds as their safe money solution, consider using an FIA as a bond alternative. Remember that clients tend to gravitate towards more predictable outcomes, and they tend to avoid losses that we saw in 2022. An FIA can help your clients avoid losses and give them upside that can act as an alternative to the current bond market and rising interest rate. Finally, remove some emotion for a portion of your client's portfolio. If it fits within their risk tolerance, an FIA can help give you and your clients the guarantees and peace of mind that we're all looking for. So here at GILICO, we were actually founded back in 1926, and we've helped generations financially prepare for the future. We became a member of the Couvert family of companies as a first acquisition just 6 years ago in 2016. And here at GILICO, we have a true small family feel, a group that truly cares about all of our partners and agents. Our main home office is located down in Baton Rouge, for the folks who are not familiar with us. And we recently just opened an office here in Des Moines. Our overall purpose is to deliver value-oriented retirement solutions to the middle market and a commitment to a long-term sustainable growth strategy. Many of you probably have the perception of GILICO being specialized in the fixed MYGA business. We did have extremely high MYGA rates here in December, actually the top 3, 4, and 5 year rate, but we've built our business on fixed index annuities. So we launched our FIA products back in 2020, and the two main pillars we had in mind was freedom and flexibility. to appeal to the underserved middle market client. So the features and benefits you'll see here are designed to be easily understood for both yourself and the client. No roll-ups or payouts. There's no fees to add a spouse for joint cases. And we have extremely high, strong crediting rates and perfect renewal history. The suite has an all extremely low true cost of 75 basis points if you want to add the income rider to eliminate sequence of return risk. And our wealth choice can truly be a one-stop shop for accumulation or income. A lot of carriers are building income products or accumulation products. This truly could be used for both. We issue up to age 90 on the 5 and the 7 year products. 10% free withdrawals on all of them, even in the first year, and then ROPs available in the 6th contract year. Taking a look at our rates, these are going up on Monday, the 9th. So this is very timely. We are going to be boosting up our fixed bucket on all products to 5%. So that's the 5, the 7, and the 10. We also have a bonus version of our FIA, the 10-year with the bonus. That's a 5% premium bonus, no fee, and it has an optional 5% bucket. So you can pair a 5% fixed rate, 5% bonus, guarantee your client 10% in that first year, and you still have incredibly strong strategies to reallocate to. Right now, the cap on our bonus is at 10.75%. Top cap on a bonus. It's pretty remarkable where that's at, considering where we were just 8 months ago, sub 5%. It's a great time to be helping your clients protect the downside while capturing any market gains that we see here over the next year. We also understand that renewals are incredibly important to your client, and our pricing strategy definitely takes that into consideration. We have a levelized options budget on all of our products. So that just allows us to have more stable renewals throughout the entirety of the contracts. And so far, we're thankful that we have not dropped an index crediting strategy on any of our wealth choice series, that 5, 7, 10, and the bonus version. So we have 100% renewal consistency, and we have a nice piece here to share with your clients that may have been impacted by renewals at other carriers. The next thing I want to briefly talk about is our income rider that's available. We have strong accumulation potential, but again, we are good for income as well. 75 basis points for the rider up to age 75, and no reduction for joint. Payout percentages for the income is just 10% of the client's age. So a 68-year-old would be 6.8%, 63-year-old 6.3%. Very easy to remember, and it's straight on the accumulation value. So no roll-up or ghost buckets. It's just straight on the accumulation, very easy to calculate and explain to your clients. And like I mentioned, no reduction to add a spouse. So simply add a spouse, and we just determine whatever the payout is on the youngest spouse, and there's no fee for that. So here on the screen, this is with our current assumptions, not before the rate increase goes into effect on Monday, what we would look like on a SPIA versus our income. We're very strong in early income. So we've got $100,000 going in for 2 65-year-olds. How much income can we generate guaranteed for the rest of their life? We're at $6,080. Still a strong accumulation value for a death benefit, low fee. They can reallocate to other strategies if they need to, and they're not stuck in their contract like they would be if they had a benefit-based roll-up at another carrier. So a lot more flexibility with this product, paired with very high income. So here's how we stack up against our competitors for year 1 income. And this should improve for next week when we have that fixed bucket go up to 5%. And I welcome any of you to take the challenge, reach out to your IAMS sales director, reach out to myself if you have an early income case. Take the challenge, see if GILICO can help boost your client's income in early years. I'd recommend anytime you're doing year 1, or if you're adding a spouse and doing joint in years 1 or 2. That's where we're going to be the strongest on guarantees. So just kind of wrap up on why I think you should use our Wealth Choice FIA in your practice, not only to eliminate client biases and aversions, but for clients looking for short-term accumulation. Older clients, we issue up to age 90 again on the 5 and the 7 year. We have a high first-year rate of return to make up losses with that 5% fixed bucket, 5% bonus, no fee. Clients need to take early income with our high payout factors, and no reduction for joint income. So I just want to wrap up here with just showing where our MIGA rates are at. We're still dedicated to the MIGA space. We certainly appreciate all the business coming from IMS in this market, and we're going to be dedicated to it throughout 2023, being near top of market. Still really solid rates across the board, and we issue up to age 100 on the 3, 4, and 5 year bands. So with that, Tim, I really appreciate the time today, and we look forward to a growing relationship with everyone. I'll open it up now for any questions, but I got my direct contact information on the screen.
Awesome. Thanks, Nate. And I'm going to go ahead and pop up that third poll question here. And that is going to be, would you like some information? As Nate just said, Guaranteed Income Life is updating their rates as effective on the 9th. So I would love to get some information sent out to anybody who is interested. One question that I get when I'm talking to agents all the time right now is, are MIGA rates going to continue to go up? Nate, do you have any insight on how GILICO, maybe some of the options or funds that you guys watch that does direct where those MIGA rates may go here in the future?
Yeah, great question, Tim. I think the closest thing that anyone can track to determine which direction MIGA rates are going is corporate bond yields. I personally like the Moody's EAA Corporate Bond Yield Index, which peaked back in late October, and now it's sitting at 4.7%, and it's trending down. I know a lot of people like to look at the 10-year Treasury, but that's not what most insurance carriers are leveraging with their MIGA portfolio and their investments. So I like to track corporate bond yields, and right now it's trending downward. And that's kind of what we saw. We were at 5.6 on our 5 year. That was a top rate for 2022 in the industry. We've come down to 5.2, so 40 basis point drop. Still a phenomenal rate, but we're starting to see corporate bond yields come down slightly. So if anybody's wondering where carriers are heading, I would just keep a track on that index.
Awesome. Thank you for that. Definitely thank you for that information. It's interesting to learn those biases and how to position, those solutions and understand that. And then that 5% fixed rate on all of your fixed indexed annuities, that's just phenomenal here as we start 2023.
Yeah, we're extremely excited. We think that's where a lot of investors are looking. They're looking for guarantees with a lot of uncertainty in the market right now, and we're going to be allowing our customers opportunity for that 5% in that first year, that 5% bonus, and then the ability to reallocate and our strong renewal history. So.
All right. Well, thank you everybody for joining us. Thanks, Nate, for the help in presenting. Want to wish everybody a great rest of your day and a great start to 2023. Have a good one. Bye now.
Thanks, Tim.